close above that, potentially today. It's a great consolidation. You've got lots and lots and lots of good stuff here. MACD as well, you'll notice down the bottom, is about to cross to the positive side, which is always a good sign on the daily. And you've got all of the, hopefully the volume will increase as it goes through. Long leg doji, decision made. I don't think that's good enough to get in myself, but it's definitely a scaling level. And then this is the target. I like path from the consolidation levels. One of the ones we started watching last week. We really do like the setup itself. Punel says, I'm asleep during the close. Yeah, a lot of us are. Depends on the time of the year for the American markets. Oil still makes you nervous. Fair enough. You don't have to trade something that makes you nervous. Why would you? Just ignore it. It's not worth it. Hans Doll says, smash that like button. ZM puts for earnings. Ooh, going against a company into earnings in an optimistic market. It is this is right. It's right there, dude. You know it is, but it's right there for a reason. Support, resistance, resistance, resistance. One of the companies I personally don't like, but it's, yeah, wow. The market hating on it right now, but you can see it's just in that perfect zone before earnings. And then as if it fails, then obviously down here we go. So, yeah, I mean, if you like it, if you think that this is enough price action, if you think it's going to be negative, then maybe even it's worth particularly looking at, what the expectation is. If you can foresee the future there, then yeah, puts could be worthwhile, but it's right at support. Earnings is always a tough one. The market's generally optimistic. In this case, the market's coming in not optimistic. You can see it in the price action. So it really has to underperform. It has to underperform. Let's have a look at SPRT, support.com. It's up a lot less than I thought it would be. It was up about 40 plus before. You can see the pumpy dumpy nature of it. Let's have a look at the first 15-minute candles yesterday or on Friday session. We had the Friday session gapping up, running hard, dumping hard, gapping up today, potentially on a bit of a run. Look, whenever it goes like that, usually it's like a pumpy and then a dumpy, like a dead cat bounce, then it dumps again and it's all over. We haven't seen sustained action out of a lot of these pumps. So these kind of short squeeze things that Wall Street's running, or Wall Street Bets is running in this case, it doesn't seem to sustain very well because human nature is incredibly greedy. We're greedy people. So when you think about it, if we're greedy people, and people want to make profit, ultimately, they don't really care about this company. Some might say they do, but most people don't. When it goes up to an exorbitant amount, the first people that are over here that got lucky in that pump tend to take their profit, and then that creates fear. And then obviously in the opens, we see this massive hype beast, and then we get fear when people start selling it. So remember, it's hype beast mornings, fear into the afternoon. Sometimes after markets, there can be covers, and those covers are really your proper tell. I guess the covers are your proper tell. So if you see the covers and after market it starts going up again, then you can be pretty sure the next day is going to be also some more hype beast. That's kind of the way I look at it. Very dangerous stock, as you know. Go at it at your own risk. I mean, it's really all about that stuff. Move over here to crypto just for a second, because I do want to talk about BTC. I just want to talk about where it's at. So it's obviously underneath 48,000 again. We've got the long leg doji daily. We've got potential decision made coming into the weakness. This will put more pressure, I think, back on the 46,000 side. And I wouldn't be surprised at all for this to happen, or even a decline, pullback, move down, 44, 42 and a half get tested. I'm still quite positive into the end of the year here. This kind of reminds me of 17 in some ways. Like, let's go back over to 17. Where are we here? All right. There we go. So in 17, we had some interesting stuff go on. So basically, there was this weakness in September. So there's the weakness in September. Weakness, sideways action. And look at the numbers that Bitcoin put on through that October into Thanksgiving in America, into, of course, December, and then that monumental rise into the middle of December, and then the rest of the market went crazy into middle of Jan and busted off. Now, if we're thinking about it again, let's say we've had that nice run in August. So the nice run in August, remember that happened last time. A little bit of weakness in September, not unusual in the old Bitcoins, the bit noodles. But if it does start to rally again, let's say we get down here or we get down to these levels, I'm actually not scared of it at all unless the big whales tend to put the shorts on there. So as we've always been discussing with the community here, BTC shorts is really what you're looking at, and ETH shorts as well is really what you're looking at. And if they're rising, then maybe don't be the plankton that gets eaten by the whale. Be the smart person. But if they're not rising, then it's really just a fairly healthy market pullback. And that's the way I kind of see it. Sometimes there'll be some news, oh, China's banned this, China's banned that. I think that's less important. The way I look at it is that is less important. Thank you very much to 1,000 people joining us now. We're about 35 minutes off the market open. And then we've got Jerry Sanders. A lot of you guys want to look at BBIG. So let's have a look at this. Up 54.53% in the morning, $8.20. Whew. $8.20. It has had runs on it before. Had the pumpy dumpy. Now it's got pumpy. It's got more pumpy today. Probably tries to get up there to that $9 kind of target. And then most likely dumpy. Unlikely this one could sustain either. What do you guys think? What's the chat think? Is this a sustainer or is this a pumpy dumpy? Is this sustain to the moon, or is it a pump and then a dump? What do you guys think? So that says Tom, IWM levels. Nothing's changed since the video on IWM. Nothing's changed. I look, it's above resistance. I mean, technically it looks strong. We'll take a look at Tesla in just a few moments as well. Cyber Takeste says, Tom, it's a squeeze. Yeah. It doesn't matter whether it's a squeeze or not. Squeezes don't mean that it's going to like $100. Squeezes just mean when does the person dump it? Everything is a squeeze. So realistically, how many times have we seen squeezes pumpy dumpy? Yeah. It doesn't matter which one we go to. They're all the same thing. There's only two that are really sustained. I mean, some people might say, oh, Tom Blackberry sustained, but did it really? I mean, it had pumpy dumpy. The only thing I can think of that really has sustained well is GME and AMC. I mean, does anyone else have one that sustained well? I mean, this is at support. I mean, I actually feel better about this at $40, like we talked about, like recently, than the others. I mean, I think these at least have some real hodling apes in them. The other ones, just practice scaling, guys. Practice scaling. Gordon brings up a good one. He says, what do you think about the Dow Transportation Index? So diverging from the rest of the market. So we're here. I think in normal times, this is pretty important to look at these ones, the average and stuff like that. When you're looking at these indices and they're different from the rest of the market, so it brings up a good point. Usually it shows a sign of underlying weakness in the market. I think a bit of this, though, when you think about it, is probably the monster rally that we had. It was due for a pullback. So I noticed that almost everybody is going incredibly bullish now. So in the space of a week, the bears are being killed. They've been killed, they've been slaughtered, and everyone is bullish. Chat, what are you? Are you bullish? Are you neutral? Or are you bearish? Tell me right now. I'm interested. This could be a good trade, though. Remember this. Because if you're always optimistic in the market, technically you're a winner. Hey, I'm not going to say you're not. You are a winner if you're always optimistic in the market. Buy the dip is not a saying for no reason. But if we have resistance here, let's say, and we break through this, could be some nice rallies here into this 1600. So there are trades inside of trades coming out of the Dow Jones Industrial, but it is weaker. It is unusual to see this without a pullback. but it's not unheard of. I saw a few people in my feed come up. They were very, very, very positive on the market. All of a sudden, everyone's incredibly positive. I'll maintain the same thing. I'm bullish on my investments. Wouldn't move them. Wouldn't change them. Wouldn't do anything about them. On my trades, I'm taking very specific trades. Am I adding? No. That's my personal belief and my personal choice. You don't have to do that. Of course, you shouldn't do that. You should make your own decisions. But that's the way I think about it. Let's see what everybody has here. Kunal says, hoping for some September volatility. That'd be cool. Ray says bearish. Ron says bullish. Travis says neutral but trading. Perfect. That sounds good to me. Ian says bearish, but I keep being wrong. You should not always be bearish. You should only be bearish. Very, very well. In fact, you should almost never be bearish. Look, bearish gets clicks on the YouTubes, of course, because everyone loves a bit of fear. But as I always maintain to people, there's a difference between investing and trading, and also dollar cost averaging. And that's the big key thing here, guys. There's a difference between everyone, and you've got to understand that as your whole portfolio trading, as your whole portfolio investment, are you sometimes buying stocks at cheaper rates? Dips, of course, are buying opportunities to add to your long-term thing. You don't want to always be picking everything. You don't want to sell your whole portfolio predicting the market crash. You're going to be wrong a lot of the time. You know what I mean? It's about having that harmony with being able to say, okay, maybe I'll leave some cash behind here, fit, and then keep having the rest. You know, it depends on what you want to do, but that is definitely one of them. Also, traditionally, markets before they fall have one last little bit of a rally pull to make sure that they convince everyone that markets will not fall. And I've seen the rhetoric change in only a few short days, and I'll bring it over here for a second. In only a few short days, I'm not even kidding you, people have gone from being partially bearish to giving up on being bearish completely. We've got people going from being maybe neutral to completely bullish. And we've got people that are traditionally bearish getting so much hate from their fans on YouTube that they've gone bullish. I'm not even kidding you. They've gone completely bullish. Now, I'm not prepared to go completely bullish because I will stick to the stats in some ways here, but I'm always going to follow one thing, and that is, what is the price action telling us? That's all that matters. Who cares about anyone else's opinion? The price action right now is bullish. It has been bullish consistently now for a long time. If we go over to the SPX, we pull in this daily, every single damn 50 EMA, every single one. Look, it's disgusting. Look at it. There's been a buy the dip scenario. You can't deny it. We've talked about it several times. You get underneath the 50, well, we're on. Let's go. The bears are back. The salmon is coming out. They're coming out to kill everybody. That's what they're doing. They're out of the hibernation, but at this point, they are not here, unfortunately. Thank you to the 1,050 viewers as well. Appreciate you guys coming in. Justin says someone define price action. Basically, the psychology of the market would be the easiest way to understand it. But what price action is the price movement. You're reading the price movement and you're understanding the flow of the market from that perspective. I would suggest you literally search it in Google if you want to understand it more. I like to think of price action as understanding the psychology of the market. That's the way I really think about it. Jose says, my spider sense is telling me the rug will be pulled. Yes. And then Sergey says, Monday is a continuation of whatever happened Friday. Generally, yes. And Monday is generally also a positive, bullish day. Also remember, trend lines is technically not a good thing to use in your fledgling TA. If you're beginning on TA, horizontal support resistance, buy, sell zones, resistance support, not trend lines, guys. Trend lines suck. They suck, okay? Very specific times you use trend lines, but I could, look, this is what you always see with TA, and then we'll get into our normal programming. I hate this one. This one pisses me off when I say it. All right, guys. I got the market trapped here, okay? I got the market trapped. I know that if it breaks above this, it's going long. This is what gives TA a bad name. If it breaks below here, it's going short. And I've trapped this zone. It's the best zone. I know it is. That is the biggest crap. It's like that meme where the guy's got like lines everywhere. You've got to think about it logically. If you're going to draw lines on the chart, understand, is it a key psychological zone? Does it make sense? Has it been following that quite a few times? Again, how important really is that resistance or that support? These are things that we definitely want to be paying attention to, not just drawing random scribble. It's about trying to predict things over and over and over again. That's what we want to be doing. Thank you very much. 1,100 people now. Great to have you here. Remember to upvote, like the video if you do enjoy it. It does help us out. All right, let's go through some stocks and commodities here. So we've done the market indices. Look, tough trading on the market indices. Why I say that is because we've had some decent moves. And again, we look at the US 100, the NASDAQ. Wouldn't be so tough if we get back down here during the session. Obviously, 15.4 should act as buying pressure. For the resistance side, I guess you're just looking for it to break out above that 15 kind of 470. I don't particularly love that trade, so I'd go to stocks instead today. IWM, it is breaking through. You've got that daily close above the resistances. Next stop you would think is 232, but who knows with IWM, it's crazy. Then we've got Tesla. Let's move on to Tesla. I quite like this stock if it's allowed to get out. So you've got 1 rejection, 2 rejection, 3 rejection, 4 rejection, 5 rejection. Little rejections, admittedly, not huge ones. You close above this point. What happens? You trigger lots and lots and lots of buying. All the little stops that are here, all the things that have held it down over the last week are enabled to go through. But one word of caution about Tesla is Tesla tends to run in very specific periods of the year over its very short history. November has often been an incredible run period for Tesla. Take a look at this. Case in point, November, boom into December, okay? November is the month. If you're a Tesla fangirl or fanboy, November is insane. It's insane, guys. It's got like the highest stat on it out of all the Tesla seasonality. So let's just say, theoretically, we go through September and October and the back end of October comes and you're seeing a resistance breakout on Tesla. Whew, you might have to subscribe to the stream because we'll be talking about it. Don't worry about that. That could be fancy. That could be some tendies on Tesla. Let's move over to the US 10-year. Nothing much going on there. We move over to the DXY quickly. It is underneath the daily 20, obviously testing from the bottom up. You can see here, previous resistance becomes support. You've basically got that dynamic here that's interesting for shorters in the market. They're going to be looking to short this area, look for a little lightning bolt towards the downside. On the other side, you've got gold. Now, it makes sense that it comes back, tries testing this level as dollar index is forced around that area. So gold trying to move now towards the 1830. This looks a lot better on the higher time frames. But actually, the surprising one is probably silver. So if we have a look at silver, it's trying to break out so much. So you got resistance, a little bit of closure, 20 daily moving average. Today's the day for silver. Will it get above? Silver fans, unite if it does, because that'll be pretty sweet. We will continue to follow that. We've got VIX incredibly low for VIX and volatility fan people in September. Now, if you don't believe in one thing, let's say you don't believe in September being a fall month, what September does tend to bring is actually volatility into the market. It tends to bring volatility to the market. So we're getting back down to a point of volatility basically being neutralized in the market so far. We've demonstrated several times why this 15.5 is a pretty cool level for volatility to pick up off. So interesting point there for the VIX traders. Let's start doing some stocks or some stonks here that are coming through. So we've got Square up at 270 in the pre-market. Trough, peak, high peak potential here, 275, 274. Could be a good trade here to the long side later on in the week for Square. You can see Very important zone for it. Watch the space, I would think. We move over to Apple. Apple obviously putting pressure on that 150. That will be a key level for it still. If we have a look at the weekly, you'll notice we get long leg doji, an indecision candle again last week. We break through. I think it's the real deal. The market continues to bull up heavily. This is a great indication of market health. Remember, Apple, big stock. It's going to move the market a little bit. Amazon, for fans of this particular one, you do see it coming back into the trend line now. Very little pullback. So I think what you'd hope is this pullback, movement through, bang, smash that level that we talked about last time, back to bullishness on Amazon. So this will be a very interesting zone to focus in on. Remember, Amazon tends to run into which event, guys? Tell me which event. Chat, you guys got big brains. Which one do you think? Which one do you think? Scott Morgan says, Tom, can we talk about how much AMC, SPCE, and GME suck? Only one of those sucks, Scott. Only one of those sucks. SPCE sucks. But AMC and GME, no, they're okay. They're okay in my book, all right? I don't mind them. They're all right. I like this trend line. Let's see how it interacts with that zone. Google continues to be a monster, 2,900. I remember when that only last year. Where was it? November. Where the hell are we? Wow. All the way back here. We're still giving a $1,600 price tag. That was cheap. That was cheap, guys. Look how long it sat there for, too. In the 12, 1300s. It was insanely cheap. That one took ages to get fired up. Anyway, it's always another opportunity. Snowflake back down to 294. Probably want to see that continue to float off the 292 if you're interested in that one. Enphase, I think, presents some really cool opportunity this week. I'm strongly looking at my 177 line for a closure above that. Very cool. Microsoft, meh. ARC-G or ARC-K. ARC-K actually starting to look a little bit better, but I wouldn't TA that. Look at Tesla. ARC-G, not bad. Good closure here above the resistance. Beam, so close for Beam. 110 in the pre-up. Oh, that's nice. Thank you very much, Biotech. Let's see if Biotech can get cranking. 110 plus. So we're looking at a 111 closure breakout. Could be on for Beam. Interesting times. We've got Edit floating around at the peak as well. Nice to see all my stocks coming in here, these bio stocks. And CRISPR, heavily behind here, guys. I think the tech is actually behind, and that's the problem. So you got trough, peak, higher trough, doji. You're looking for a 128 closure above. If it does happen, I expect an explosion out of CRISPR. So that'll be a good one. SPLK is also really good at this zone. I still like SPLK, but it's a boomer stonk in terms of tech. It takes a longer time. A few people there said, Musti said, Christmas Amazon gifts, bruh. And then we've got some people, Terry M, saying Black Friday and some Cyber Monday. Absolutely correct. It tends to roll into those events. Remember, it's just like Apple. Apple rolls into its second quarter or third quarter earnings a lot of the time. In this case, Black Friday and Cyber Monday are a bit of a catalyst for Amazon to roll into as well. So certainly something that I do watch. I certainly do watch that. MDA 99 DAS says Barber is better value than Amazon. Hey, nothing. Yeah, of course it's better value than Amazon. But the problem, it's not a question of any of the Chinese stocks are better value than all the tech stocks in the US right now. From a value standpoint, you could not fault that. You could not fault that, guys. But the problem is, MDA, is that the government is punishing those stocks. And until you get rid, uncertainty is the killer of stocks. If we had uncertainty in the world, and I'll reiterate, the only way I really see the market full on crashing over the next couple of years is this word I cannot say on YouTube. Uncertainty is the destroyer of stocks. And that's why the Fed creating certainty and has basically underpinned the market. Even if the Fed's, monetary policy didn't do anything, it's perceived to do something. If it's perceived to do something, people get confidence. That wealth effect is a lot of confidence. Remember, when the government goes in and underpins the market, It's all about creating confidence. And when you have confidence, you overpay for stuff. And that's how you get a high multiple. CRM continues to look to fill the gap. So if you're interested in this one, look for it to fill the gap. I like the stock over the long term. I think it's pretty cool. Disney, starting to make some moves here. 180 for Disney. Starting to come out of its slumber. Look at this. Getting very close. Let's get rid of this line. We don't need these stupid line. We need that. We need it above 181. Very close. Daily has done it though once. So geez, Disney's really close, guys. It really is. QCOM still going. It's actually about to lightning bolt again. Trough, peak, high trough. Looking for a higher peak if you like this kind of semiconductor stock. Obviously slower moving. I do like it during this period of year, but it is what it is. TDOC, another one that's looking great this week. Trough, peak, high trough, potential higher peak, 146.39. I like that. Barber, a few people mentioning it. Not for me yet. Very scary stock, unfortunately, but it is at its lows. Baidu, very similar. JD seems to be the only one that's doing well, but I would prefer it down at 73. Previous resistance becomes support. TWLO, really looking for that 363 breakout. That would be sweet. Close above there. Very, very nice. NVIDIA continues to power on, 228 at this point. The rally was meant to go, let's have a look. About 237 would be ideal there. Pins, getting there. We'll keep watching. TAN, it's pins down pre-market, 0.59, yeah. TAN, looking okay. Roku, still disgustingly sick. Definitely a sleeper hit. Sleeper hit once it eventually comes good. Etsy, it's pretty much done. Coke didn't do anything. Get rid of that. DKNG, probably look for a bit of a pullback there. Airbnb, now this is one that we had a request for before. Let's bring this up. 4 hour. 2 hour. Okay. So you got trough, you got peak, you got potential for a higher trough here. Turnaround. Break above this zone. As we mentioned with Airbnb, we need real action here. 156.60 closure plus should instigate further buying. We're in our box, but we haven't seen the turnaround action yet. Continue to watch the Airbnb space. It is at the zone, guys. It is at the zone. Now, I saw a super chat before, and let me just see if I can pick this up. 1 second. Let's bring that up. You guys can check out the Webull screener for the biggest stocks here while I pick this one up. Return to sender $5 after, ATER, sorry, for short squeeze. Okay, we'll have a look at that in just a second there, return to sender. Thank you very much for your generous donation. So the best stocks in the big size here are Workday. We've got Coinbase up 4.26%. Nice. We've got Pioneer. Wait, that's not today. Pre-market, that's on Friday. CrowdStrike 2.33%, continues up 288. We've got DocuSign 304. Surprised that's still so good. We've got Square at the price of 270. Spotify 227. Their buyback. We've got SE 322. That's a beast stock. And then Moderna, some of the shine coming off that one. Coinbase actually down 1%. That sounds about all right. Then we've got Snowflake 1.24% down. So big market moves, nothing too exceptional there. Let's have a look at this ATER. 927. Filled the gap, it has. Price on this $217 million stock. Very small. In December, it rallied. Got squeezed probably at the end of Jan. Went to $49 and then became the worst dumpy that you could have seen. Now it's rallied 620 into 920, up 51%. Oh, wow. Filled the gap. I mean, yes, there's potential here, but your guess is as good as mine, man. like anything here, you've just got to practice kind of scaling, I feel. Take a portion off at levels you like. I mean, you've filled the gap, so that would usually be one take profit kind of zone. Then your next take profit might be like $20. I'm not even kidding you, 12.50 or $20. Crazy looking stock. Good luck. But there's not much you can do TA wise. I mean, what can you say? At this stage, you're only looking at key zones that you believe could be dumped off. That's really all you're looking at. You know where the highest high has been, but you also know that it's unlikely to get that kind of hype in it again. Finkin79 says volume on ATER is nuts. Yeah, the volume's big because there's a lot of stocks kind of being. You can obviously take out a lot of lines, but yeah, I don't know if I'd look at the volume as the only indicator of a massive squeeze. It's big, but there's big volume here too. That didn't work out. It's the wrong side. Yeah. I like it where it is right now, and then I like it at like 20, and then after that, yeah, the world's your oyster, 30, 40, keep following that thing through. But have a plan. No matter what you do, always have a plan for these types of things. Always have a plan. Fernando asked a good question. Let's quickly go over here. So he says, what is scaling out? Do you like sell 33% at a price point and then continue as the price goes up? That would be correct. You would have a strategy. I do like the rule of thirds. And your rule of third strategy might be you sell a third here, you sell a third here, and then you might hold a third forever if you believe in its investable qualities. And imagine if you, so let's just think about a scenario that you guys can really probably think about. Okay. So let's say you bought AMC at $4. All right. And you put in 10K. Now you're probably not going to, but let's just say you did that. Let's say you took a third off at $8. Okay. Fair enough. You could have taken a third off at $8. So you'd still be making a large percentage. You'd still have it in. You would have probably almost got your return back. Then you might have taken a third off at $12 or $14. Okay, very much fair. And then if you hold your last third for quite a long period of time, you've really got that opportunity to see it grow heavily. And by the end of it, yes, you won't have as much as the person that put 10K in and sold it all at $60 or something like that. But what you will have given yourself is a chance, and you could sleep better at night knowing you've got your money out, you're playing with markets money at that point, and you're really just following that trend. Some people even forget about it. I mean, I wish I forgot about Bitcoin back in the day. That would have been sweet. Come back, have my 156 Bitcoins, which I sold for $13 or something like that. Some ridiculous amount of dollars. That might have been odd as well. Oh my God. Big Dipper, $5. GENI, sports betting, hired Bornstein, ex-ESPN and NFL Network CEO, built ESPN, Sports Center, and NFL Network, plus the Red Zone from scratch. Thoughts? GENI, Genius Sports Limited. So is this data processing? So what is this exactly, though? What are they trying to target, Big Dipper? Let me know. So it's just sports betting? Online sports betting, that's it. Look, I think sports betting's huge in America. I've talked about how in Australia it's a big thing here. What failed FDA approval? Simon? What failed? Look, sports betting's huge in America anyway. We'll go on to that. In Australia, obviously, you can live bet, you can do all these things. I know for a fact that it makes a ton of money, and we all know that there's huge amounts of money in sports gambling. If you feel comfortable with that, these are always stocks to look at. DKNG is another one, though there's obviously some two different sides to that particular stock. Yeah, I think it's all about getting brand presence and having a really, really good name. So I think DraftKings is really got that brand presence now over all the years. In Australia, it would be Sportsbet. Literally. Sportsbet just controls a huge much of the market. There's like Ladbrokes, there's all these other companies, but really at the end, Sportsbet has the best name and their software's always been top notch. Their software has always been top notch. So, yes, if this is an algo company that comes up with the stats, interesting. That's pretty cool. Could be making a good amount of money. Resistance, 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 and then you got a breakout. So this is looking to roll right now. Trough, peak, high, trough, high, peak. I noticed on the larger time frame. Certainly is making moves. Looks all right. I don't think anyone's actually, Jimmy, I don't think anyone doubts that Charlie Munger is an animal of investing. I mean, him and Buffett, even the way they kind of worked out, the Warren Buffett indicator, the way they've done investment, I don't think Munger gets enough cred for the fact that he probably made a lot of the investment decisions himself, actually, and Buffett kind of is the spokesperson for it. I wouldn't be surprised. But that being said, there's plenty of great investors out there. I like Druckenmiller as well. I like a lot of different investors. Doesn't mean I'm going to listen to what they say. I think their quotes are correct, but what they say and do and what they're doing and what they're telling you can be very, very different. I think Buffett doesn't have anything to gain from, or Munger has nothing to gain anymore from telling you one thing and doing something else. But you've got to be careful sometimes with what everybody is doing. Let's keep going through some of these stocks. We've just got 4 minutes to go. Intel's a sleeper, I think, in the future. That'll be one to spot up. Also think Netflix is coming in on a zone. Remember, Netflix has done nothing since July 2020, the worst stock ever, really, in the tech world. So this is one to watch out for. Unity continues to kind of stuff around here, but it's certainly on its way forward. Play, really great breakout here. Let's have a look. Pre-market, where are we? 37. Oh, we didn't even get a bloody bullish close. I thought we were going to get that. So we got long lead doji. We didn't get a breakout in the end. It's still around the right zone. So we have to continue looking at this accumulation. This is a pretty good channel though. So watch this space. Watch how the price interacts today. I know it's down 3% pre-market, but that could be a good spot. NVAC still holding within the zone. Path, as we mentioned before, certainly looks good. PLTR looks really good for PLTR holders. I hope you guys get 2730 plus. This would be very sweet. Great closure here. Could be better, but definitely very, very nice. Zillow, one we'll watch later on this week. Roblox back at support. So that's looking for a turnaround. And then, of course, we've got AMC and GME. AMC right on support here early in the session. And GME also kind of just hovering around that resistance support. We do have a donation coming in from Mitchell Miller. Always appreciate your donations, sir. And then it says $10. What about options? Scale out as well. My greed has been getting the best of me with options. No, there's a different way of dealing with options, and it's all about reaching a certain price potential before expiry. So it's all about, basically, it's a ratio. And when you know that ratio, you take it off. Look, it will be in the course. I'll probably save that one back for the options course, man. I know you've donated to me, so maybe you can message me. But yeah, basically, message me in Discord. There is a ratio that you want to use on options. It's a little bit different to scaling out. It's all about time, and then time to how much profit you're in. That's the ratio you want to be looking at so you don't get burnt. Because yes, the market has a tendency to go in your direction, and then by the end of it, it'll expire underneath. Kind of like what happened to AMD the other day, yeah? Kind of like that. So we're about to hit pre-market here. Let's go through our stocks. As per usual, we'll watch Tesla into the open. We've talked about that resistance being the key area we want to look at. We'll put it on an hour so it looks a little bit better here. See this resistance? Look at that. Very important zones coming up here for Tesla. We've got this resistance here that needs to break out today. Got US 500 coming in at 45.16. A little bit green here this morning. Mondays tend to be the greener day. And then we've got the US 100 coming in with a slight tick up and then small pullback there early in that session. We'll watch. Which stock do you want to watch? I assume it's going to be Spirit, Support, or support.com. We'll check that out. Put it on a 3-minute chart so you guys can see. Got pre-market 36.54, up around 39.57%. Mitchell Miller, just jump in and message me, man. I don't scale options. I tend to take them at a time. OL says gold. Yeah, we did gold before. So gold should be pulling back a little bit here, and then hopefully we get a move through. Check out DXY. Dollar index is going to be the key one that you want to look at. Kevin says, put SPRT on. It will be funny. Yeah.
Time exchange here at the big board, by the way, that was Chemed Corporation celebrating its 50th anniversary. Over at the NASDAQ Reservoir Media, the first female-founded and led publicly traded music company in the U.S., Cardi B and Offset. Are there as well. Are they? Let's see them. Are they in there somewhere? Oh, all right. They said they're there. Who knows? We were talking about Iridium and Globalstar as well as Starlink. But, China has been something we've been greatly focused on of late for any number of reasons, Mike, in particular, just a cascade of regulations that the country has imposed on various companies as it tries to clamp down, frankly, on the overall power, it would seem, to a certain extent, of the companies and their management teams. That's sort of the broader theme, but then they get deeper in. The latest, though, is not having as great an impact as you might have expected, perhaps, in the market, at least when we take a look at Tencent shares, perhaps because they've already been down. But China is introducing a new regulation. It's been announced by the National Press and Publication Administration that will ban minors from playing video games entirely from Monday through Thursday. And on the other 3 days of the week, you get 1 hour a day. You're only permitted to play between 8 and 9 on Friday, Saturday, and
Controlled
Sunday.
Gaming.
So 3 hours a day. Apparently, they're going to rely to a certain extent on facial recognition technology by the companies themselves to limit playing time to 3 hours a week, and that only being on Friday, Saturday, and Sunday.
And just coming really as part of this overall push where clearly Chinese authorities feel as if there's just been too much commerce, technological development, capital raising, wealth building in areas of the economy that they feel are non-strategic, frivolous, waste of time, and counterproductive to the long-term competitiveness of the country. I mean, it's really kind of amazing in that sense. They're saying, we know these companies are great, that we've created and they've accessed global capital, but they don't like what it's doing perhaps to priorities in terms of what lines of work people go into and how they spend their time. That's amazing when it comes down to it.
Yes.
Second biggest economy in the world is being run that way.
Their ability to surveil, of course, is also unsurpassed. And so
That's
their
right.
ability to actually control these kinds of things in a way that we could never imagine, let alone, obviously, nothing like this would ever happen in the United States.
That's right.
Maybe in my household, I might try to impose that kind of a ban. Not successfully, by the way. But, it's obviously the question, Morgan, so many investors have when it comes to China is, when does this end? When do we know we finally hit sort of the baseline, and now we can start to at least work with a series of regulations that have been imposed that can give us a sense as to the economic opportunity that still exists for so many of these companies?
I mean, I think that's the key question, and certainly it's one that investors and hedge funds and the like are grappling with right now is you do start to hear the reports that some folks are starting to make investments, some of these big tech Chinese names as well. I mean, it also speaks to, I think, broader socioeconomic dynamics that are at play in that country, too. I mean, you just look at what's going on the industrial side of things, too. This is a country that, and we've been having this debate here in the U.S., but this is another country that is concerned about things like inflation, income inequality, and what that does to this emerging middle class in that country as well. The fact that you have curbs now and trying to put a tamp on prices of key commodities, which has ripple effects here, too. All of that, I think, is at play. Yeah. And even as we have conversations about port shut-ins and supply chain bottlenecks and everything else that are affecting the world.
Yeah. Other names that we're watching this morning include Affirm. Affirm Holdings up over 40%. This on news that it may be included on the Amazon platform. As a way for people to buy over time.
Buy now, pay later.
Yeah.
Purchases over $50. I mean, certainly makes a lot of sense, right? And it speaks to, I think, a bigger, broader, huge growth opportunity from an investor standpoint with some of these names like Affirm that are targeting this area, and what it's going to mean also for like credit card companies and some of the other more traditional financial services names, and also whether you could potentially start to see some of these names in play as takeover targets.
Right, for sure. I mean, for one thing, the way Affirm shares have reacted shows obviously the power of just being included on that checkout screen, presumably for Amazon. But also, it means Amazon's not going to do it itself, right?
That's
so, I mean,
right.
in theory, there could have been a sense out there, well, everyone's looking at buy now, pay later. Is Amazon going to buy, partner, or build? And so that's part of it as well. But I have definitely been noticing, if you look at the way Visa and MasterCard have performed, and they're not totally shut out of this whole thing, but fintech, purely defined, whatever you want to call that, has outperformed the traditional Visa, MasterCard rails, even when we're talking about a comeback in spending levels and all the rest of it. So there's a sense out there that stuff's going on outside the usual players, whether, in fact, this is going to be, make a big difference or not, or whatever. But it is kind of amazing, and coming in a week that we were talking on Friday when the news broke that Affirm has been viewed as a shadow Peloton play because so much of Affirm's business was financing those bikes, and it had traded in that way, and Peloton had disappointment in their outlook last week, and then this comes along. It just kind of like banishes all those concerns because obviously, in theory, it totally diversifies the business away.
It was Square, right, that did the Australian company that's a competitor to Affirm. Or obviously that deal is still pending, but they announced it.
And the bigger question, too, is what does it do? I mean, because the whole pitch is it's very transparent in terms of what you will pay over the life of that, financing that purchase, as opposed to having this revolving debt. What does it do to credit card rates and what they can earn on balances down the road? Because if it really disrupt the market, there's a lot of margin there in traditional credit card lenders.
Afterpay was the deal I was referring to, of course, that Square announced. One of the larger, actually, M&A transactions we've seen in recent times.
Which says something.
Yeah, for a private company.
But also just one more thought on this is that, this idea of partnership also speaks to the fact that Amazon, like some of the other mega cap tech players that we talk about every single day and move the markets, are under such tight scrutiny, antitrust scrutiny, M&A scrutiny, the like. You do wonder whether this partnership was born rather than, say, an acquisition or something else being built, in-house, whether it would have been the same dynamic even just a couple years ago.
It's trading at $25 billion right now after a 40% move. It was easily acquirable by a humongous company.
Amazon can acquire anything it wants, but the question, of course, it's a very valid one, is whether it will be able to acquire anything after, if in fact it does get through the MGM deal, which nobody expected to have or face any significant challenges, and yet the FTC has been giving Amazon a hard time.
They're giving everybody a hard time.
Even about MGM, and so it does make people wonder whether Amazon and any of the other enormous platforms are really going to be able to do anything of size, or perhaps enter into potential partnerships, the likes of which we're discussing here. Guys, speaking of M&A, the Journal reporting on Baxter getting close to a deal to acquire Hillrom. They make a number of different things in the hospital setting, of course, would go along with Baxter's current portfolio. There had been reporting on this some time back that they'd come at about 144, and then that was not a price that at least Hillrom was willing to consider. What I can tell you is, you can see it there, 156 is the price I'm hearing, and They are very close, probably a few days away from signing said deal, all cash. You can see Hillrom shares are up. Now, again, they had already been trading higher based on previous reporting about the overture that was rejected initially, but it does appear they are very close to getting to that deal. And again, we're talking around 156 from people close to the situation. Unclear whether we really have any significant antitrust, although you can see right there, at least people are not sending it. There is still going to be a spread there, given perhaps how long it would take. And, of course, there is still some risk. But they are getting very close to that deal as well.
One to watch. I want to point out, just I guess, shift a little bit. We were talking about Hurricane Ida earlier in the hour and the impact on energy, crude and gasoline prices and those stocks as well. Another group to keep an eye on is going to be your insurers, which are under pressure today. You saw many of those names actually close the week last week, despite the coming hurricane and how quickly it was intensifying. You actually saw them close higher. Today they're under a little bit of pressure, perhaps not surprising. You're starting to see, and we'll get more detail around this as the days go on and the weeks go on, you start to see more claims, more assessment of damages, et cetera. But you're starting to see some of those risk modeling estimates out there that this could be $20 billion, give or take, depending on some of the numbers that are being reported in the last 24 hours in terms of insured losses. It's the names that you would expect that could, potentially have the most exposure. It's names like Travelers or Chubb or Allstate, Progressive, the Hartford, on down the line, reinsurance names as well. And most of those are trading in the red, albeit pretty modestly, given the fact this was a Category 4 storm that barreled into the Gulf over the weekend. But compared to Hurricane Katrina, for example, 16 years ago, yesterday, where the levees gave way and we saw hundreds of billions of dollars worth of total economic damage and large numbers. I think some of the largest on record for insured losses as well here in the U.S. This looks to be more manageable. And for many of the insurers, the property casualty insurers, they came into this with pretty strong books because as we've talked about in the past and with the rally you've seen in some of those stocks in recent weeks, recent months, they have been able to raise their rates, and we had not seen a lot of major catastrophes, at least this year, up until this point.
Yeah, and, some of the more recent storms since Katrina, remember, it was the flooding that kind of, got a lot of cars essentially
That's
ruined.
Right.
And that
Hurricane Harvey,
that was an element
thing
that maybe hadn't been unforeseen. And of course, after this happens, you always get people say, well, rates are going to go up. So it'll be bullish for PNC down the road because they will have a little more pricing power down the road.
That's right. I also we were talking about space before the bells.
Yes, please.
I want to go back there and specifically the rocket side of things. A name that is recently public via SPAC. We've had a number of them in recent weeks. But Astra, shares of Astra Space are trading lower. They're down about almost 20% right now. This was after the small rocket company attempted its first launch since becoming a public company. It was Space Force payload aboard as well. It was a test flight, and you can see right there, this is from Alaska on Saturday evening. It attempted the launch, and about a second, according to the company, about a second into liftoff, one of the engines shut down, and about 2.5 minutes into the flight, they basically ended the mission and brought the rocket back and the payload back. So there was a full recovery there, but you can see those shares are under pressure because this rocket did not reach space. This is the second attempt by Astra to reach orbit that essentially failed. It did not reach orbit. That being said, Chris Kemp and the team over at Astra did say, quote, "We regret that we were unable to accomplish all mission objectives for the U.S. Space Force. However, we captured a tremendous amount of data from this test flight, and we will incorporate learnings from this test into future launch vehicles, including the new rocket that is under production right now, that is currently in production." So that's one to keep an eye on. And of course, it speaks to something I say all the time. It's very trite, but space is hard, which is why it's been very eye-opening to see so many of these companies go public and why so many of them have gone public via SPAC. And of course, this comes on the heels of what was a busy week last week with Rocket Lab Another direct competitor to Astra actually going public and beginning to trade. And Virgin Orbit, Richard Branson's other space company, also announcing that it, too, now has plans to go public.
Yeah, Next Gen 2. That was a week ago that they announced that deal to go public. And many of them, of course, using that SPAC. We've also been focused on SPACs for other reasons, including incredibly high levels of redemptions for so many. But not a story this morning. Let's get to Bob Pisani for the story on what's hitting the market or not. Bob.
Good morning, David. Happy Monday. Good to see you. As always, flattish open, but the S&P again at a new high, and the markets keep rotating around. That's the key story for the month of August. In fact, it's been the key story all throughout the year. Take a look at the major indices. The big winners as we close out August essentially are the bank stocks and technology, which have held up very well. Flattish open on banks, tech still doing well, materials okay. Energy is one of the only sectors that's down on the month. A little surprised that it's such a quiet open for energy given all the turmoil with the hurricane down in New Orleans. But you see here, flattish open. Oil's holding in there, down slightly, about $68 here. The key story here was really what was going on with the Federal Reserve and where they might be going here, but less fears of an aggressive Fed. That's the sort of message over the weekend I heard from all the traders I talked to. The key Powell takeaway, well, they'll taper a little sooner, but there's much lower chance of a multiple 2022 rate hikes. And I think the key story is much less chance of a taper tantrum in general. A lot calmer atmosphere around the Fed. COVID, hard to describe. The market seems to be believing it can work through it despite the high levels of positives that we're seeing for some people, even amongst people who've been vaccinated. Earnings are still rising. In fact, the estimates are rising for the third and fourth quarters still, and most traders believe they're still too low. And we have record margins, over 13% for the S&P. That's a historic record, and that is why the S&P is at a new high. Earnings still rising, belief that the earnings need to go even higher, and margins are at a record. It doesn't get any better than that for the earnings. The biggest influence on what the Fed is going to do September 22nd is going to be that jobs report. And you see what the numbers are here. The estimate's 750,000. You see July, we had over 900. June, we had over 900,000. So the key story here is the bar to not taper is very high, but I think the bar to begin early rate hikes is also very high at this point. So it's sort of a Goldilocks situation here. They're fine with the tapering, fine with putting off rate hikes in 2022. The seasonal weakness we're seeing, that's pretty well known. We know this pretty well, what's going on here. We know August and September are the two weakest months of the year. So we have three really weak months of the year, September, February, and August, and we're right in the middle of the two weakest months here. September is the weakest month in general. That's what we're going into. February is also generally a down month. This is since 1945, the averages. August is actually a flattish month, but believe it or not, that's the third worst month of the year. Even when you get into
that final one that I did as the example video, somebody sent me NFTs. That was funny. So you guys got my wallet from the video, or they found out how to track me, and they sent me NFTs. Logan Paul posted my NFT video on his Instagram story. That's hype. I still haven't even seen the what's.
hold it until it reaches closer to your target price, as long as you still believe in the story. But if they come out with a story with a quarter and like basically say things are changed, things are weaker, we put up a bad quarter, and we think that next quarter is going to be bad, and we don't know how to, and you see new information that shakes your belief on why you bought it in the first place, that's a sign where maybe you should sell at a loss. I think people peg too much to, I've lost money, so I don't want to sell it at a loss, or I've made money, so I want to sell it because I made money, right? At any given point, what is your up-to-date target price on the stock, and for what reason? What is your target price? What's the reason, and how do you feel about that versus today's price? What's your target price? What's the reason why you believe in the target price? And how do you feel about the position today and the price today as it relates to the former two? Now, right, so Peloton's quarter, listening in the earnings call, my price target came down, conviction came a bit down. The reasons kind of got a little shakier, and the price was 107 at the time of, I sold half of it, versus a 125. It's like, I feel less like it's a hugely fat pitch at this point than I used to. So if those things come back and you get to that third point where you're like, well, my price target is down, I don't really have a lot of conviction in the why, and the stock price right now is actually quite close to where I would say the upside is. That's the time to sell or whatever. If you don't feel good about the position today as it relates today versus your price target today versus your price target before, right? Whatever happened in the past, happened in the past. Things change in life, right? Things change in life. Every single day things change. And I mean, here's a good example. Like if you bought a house because you thought it was an up and coming neighborhood, and then a bunch of murders happened in the neighborhood, and then a bunch of like new builds basically stopped because like it was too dangerous, your view on that house would change, right? So selling at a loss or whatever is really up to you and how you think, how you believe in the position today as it relates to where you think the position should be today and in the future. And I don't even think about, is it a loss or not? It's those three things. Let's do another one. So we'll crowd like this is basically an ask about cybersecurity companies. So we'll keep that in mind. Let's go to some voicemail questions. I know we have just a few.
Hey, Justin, my name's Sean. I am a ROIC member, and something you're doing that I think is special is building a fantastic community. It feels like family. I wanted you to take a look at symbol PRFT, Paul, Roger, Frank, Thomas. Thanks so much for all you do.
Cool. Thanks for the call. I agree. And that's the special part of this, and that's why I really want it, so that we all can own whatever this is together. Again, stay tuned. It takes a while for all that to happen. Proficient seems like it's been on a tear. So trading at 117 a share. Let's go to Sentio. PRFT. William is saying he's been fighting my Peloton pick since he started it. Oh, well, yeah. Since we bought in at like $55 a share. Yeah, and Gregory, that's a good point about selling strictly based on temporary high valuation may not make sense for a tax perspective. So that depends on also like how you categorize the position. So if like an Amazon ran up 30% past whatever target price is, that's why I think like certain compounders, you're just kind of holding and knowing they're going to compound your capital at like at a whatever percent rate over time. And a 15% IRR will compound and catch up to valuation quite quickly. But if you're buying based on the fact that the stock is undervalued in the first place, selling it off makes a lot of sense. But again, maybe you want to hold it for a year for long-term cap gains tax as opposed to short-term cap gains tax. And the difference between the two is probably the delta's like what? Like 10, 15, maybe 20%. So that should also factor in there. So I agree. That's why it's like kind of hard. It's a really hard question to answer because every position is different because you entered into every position for different reasons and you're in positions for a lot longer or shorter times than each other, right? So for Peloton, on the big board, we've held it for a year now, and for a lot of that for a year now. So like depending on FIFO or LIFO accounting, you can take long-term cap gains out of that. Cool. All right, cool. We're looking at Proficient. M. Taylor saying my employer uses Proficient. It's sticky. United States Digital Transformation Consulting Company, business intelligence, analytics, commerce, content management, custom applications, platform implementations, portals, and collaboration. But it's a consulting company, so we'll keep that in mind. And they're trading at, okay, so they've had pretty not great growth over the last 4 years and have traded at kind of that 10 to 15 times EBITDA range. But they've seen what seems to be a growth spurt in 2021. And they're now trading at 26 times EBITDA, but they have really low gross profit margins because they're a consulting company, but they've expanded EBITDA margins, which, you know, leveraging over fixed costs. Yeah, that makes, I mean, this is a complete bet on if they're going to continue growing quickly. But at 26 times EBITDA, that doesn't leave a ton of room in terms of valuation upside, in my opinion. So personally, this one's kind of a skip to me. I think it's probably run up for good reason because they've now put up multiple quarters of accelerating growth. So now the street is projecting accelerating growth in the future, and the price that it's trading now at a $4 billion valuation values the company at 27 times EBITDA or 26 times EBITDA. But again, you can buy Google for much lower. You can buy Amazon for much lower. So in that sense, I'd rather just put money to Amazon or something like that. Cool. Okay, so we have one more. Kaya just called in. So.
Hey, it's Kaya. I'm a Rogue member. I just wanted to ask, how would a housing market downturn affect Builder and Zillow? As those are some decent positions in the big board portfolio. I've just been wondering, as they're heavy in the real estate sector, what kind of things we could expect if a big downturn were to occur. Thank you.
Yeah, so this is a really interesting question. So I think you see a lot of social media people out there saying, oh, a real estate crash is imminent. That's something that I don't expect, especially someone who's lived through and researched a lot about like the great financial crisis and the housing crisis back in 07, 08. I don't think we're going to see a super strong housing downturn. And I think the kind of surface level logic they use is that there are a lot of mortgages that are underwater and not underwater. I apologize for using that term. There are a lot of mortgages that are delinquent in payments because of the moratorium on foreclosures because of COVID, right? Not underwater. They're not underwater. They're just delinquent. So people are behind on their mortgage payments. Similarly, we've had a moratorium that's now getting lifted on rent evictions. So the logic is, oh my gosh, all these people are behind, and so we're going to have a ton of foreclosures and then a housing crash. First of all, I think that people have taken advantage. If you look at household savings and you look at household income, both of those metrics are up through the pandemic. And those that owned homes have actually seen their home values increase quite meaningfully through the pandemic. So they're not only in the money and not underwater, they're meaningfully have grown their equity value in terms of the aggregate, despite there being lots of delinquencies in mortgage payments. But you think about what's actually happening. I believe that people's incomes have gone up and people's savings have gone up and people's home equity value has gone up, but they're not paying their mortgages because they don't need to pay their mortgages because there is a moratorium. Or maybe all the delinquencies are being used by landlords, which we've considered at a time. We never did it, but where the ones that are delinquent are also the ones with renters, so they can't kick out the renters. So those two are kind of operating in tandem. But regardless, even if you were kind of in trouble with your mortgage, you probably today have more equity value that you could take a line of credit or sell at a higher value. So people aren't underwater, and Americans have more cash, more income, and more home equity value despite the moratoriums ending. So to me, I think the mortgage delinquency moratoriums are connected to the renter eviction moratoriums, which are both lifting, and they should probably normalize and equalize. So let's just get that out there. Furthermore, we do know that there's just a ton of pent-up demand for entry-level, starter-level, affordable-level homes in this country. So just to answer the original question about how that affects Builders First Source and Zillow is mostly affected by transaction volume, which I believe is actually muted right now because people are leaving the housing market because the prices have run up too much. So to me, I think what happens is prices start normalizing or maybe coming down a little bit. And then as supply starts flooding the market because home builders are building, well, now that lumber prices, so they paused for a while because lumber skyrocketed, right? And so they had to pause. They can't find labor because nobody wants to go back to work. Once you chew through these supply chain issues, these home builders are building as fast as they can. So as that volume continues to come to market, that should mean more transactions, which should mean more revenue for Zillow and Redfin, et cetera. More inventory, more volume or throughput, more revenue. Builders First Source is supplying basically housing starts and builds, which is a kind of a separate trend or a leading trend that we talked about with Zillow, and that's just going to continue to go up because we're in a housing shortage. In terms of the downtrend, if prices go down, that doesn't necessarily mean these companies hurt because average home prices embedded in that metric is how many lower priced homes are being sold, right? You can sell 5 times as many homes at $300,000 per pop, or you can sell, $1.5 million home, right? So the whole housing prices are going to do something. Predictions are more noisy than the super cycles we're investing behind. Cool. All right. Kai, I'm going to skip to the next one. I know you called in too, so.
Hey, Justin, Rowan member here, Diane.
Hey, Diane.
I left a message on the research request board for ticker III Information Services Group. It's a equivalent, similar business to Accenture, which more people are familiar with. I bought in about 4 months ago, but I've been really happy with how the stock sort of flies under the radar. It's a technology insights and market intelligence advisory services company with a global reach and good market share. And I listen to them on LinkedIn when they do their lives, and they are very intelligent. And I like the stock. It's a micro cap, $300 million market cap. Anyway, if you could take a look, I would really, really appreciate it. They've had an incredible run up. So I'm a little nervous about adding to my position, but anyway, thanks.
Yeah, thanks for calling us in. Looks like you found a really good one at a really good time. So I'm not really sure when you bought in. Obviously, they've gone from $2 a share to $7 a share, so you should be sitting pretty. And the reason I think is because at the end of 2020, you saw a big panic. Well, first of all, pre-pandemic, they were actually struggling too. And during the pandemic, seems like demand for their consulting services went down even further, and therefore their multiple got squeezed. So they started trading at, in retrospect, maybe six to 7 times EBITDA and a really high free cash flow yield, right? So, I mean, I've never even heard of this stock. So if we were looking at it in 2020, the thought process here would be, man, like they're struggling, but as long as we believe that they stabilize, this thing is returning a 27% free cash flow return each year. And so as long as we believe that they stabilize and we own the stock, it'll pay itself back in like 3.5 years. Now that it looks like they've strung together some growth again. Oh, wow. Okay. So it looks like they stabilized growth a bit and then saw a really strong quarterly pop this past quarter of 23% year-over-year growth. So I'm not sure if that's lapping weak COVID quarter or if something's materially changed in the company that you believe that they're going to start growing again and growing over 15% a year or over 10% a year. But if you believe that, now it's trading at, like 9 to 10 times forward EBITDA, but a single digit free cash flow yield. I would say at this point it looks fairly valued, but I don't know anything about the company in terms of if I'm going to believe, continued growth after the fact. So if you believe that you want to read their transcripts read their transcripts and their kind of investor presentation to see if they hint at, hey, like now we're going to see growth again. That was a one-time COVID hit and we're going to see growth again. That's the reason why you would hold it. But in terms of just a quick screen, it looks fairly valued. And it's the investment from here on out is probably solely going to depend on how the company performs. Over 8% year-over-year growth probably does well. Pops right back down to being a stagnant company, probably does poorly from here. Cool. We're at 41 minutes. Banks, yeah. I do own a Honda Pilot, but it's in Nashville right now. So I only have one car right now. What else? Just a recap on the growth stock thing. I think I'm feeling at least mentally fully allocated to consumer-oriented growth stocks. Uber, Zillow, scaling back on Peloton. I'm feeling in the mood for going into the higher conviction, more boring names. So hopefully that works, but I think that'll be good in terms of diversifying the big board even further away from kind of the herd mentality. Because as you see, right, a lot of these growth stocks are just trading very, very strongly with each other. And like Zillow and Uber, all things considered, if there's no news, tend to go together. So, I think another thing that it's hard to, as a fundamental analyst, it's like, well, Square was overvalued, but they bought a firm, or they bought the buy now, pay later company, right? Hold on. Mondays, right? Afterpay. They bought Afterpay, and now it's like your imagination can run wild. And I wrote in Morning Sense about how I liked the acquisition because if they could push it to be the exclusive buy now, pay later thing for all Square kiosks and all Cash App stuff, that could materially increase the value. But the question is now it's like, well, are they going to execute on it? You're buying it at a pretty high valuation for their execution. But the performance of the stock, what the market thinks of the deal, has done really well, which I agree with. So it's done really well. As you're thinking about like a firm with the news, I agree. It's amazing news. It's up 40-some% after meaningfully underperforming for the year because now they had this deal with Amazon. And if they have this deal with Amazon and they could just take like 1% of Amazon sales in terms of buy now, pay later, that could be huge for them. It could be absolutely gigantic. But now you're buying in. Let's just finish this off and look at a firm because as far as consumer-oriented names, I think it's interesting. Because of how binary that is, right? If they're going to be the exclusive, if a firm is going to be the exclusive buy now, pay later option that you see on all Amazon purchases, like that's pretty darn game-changing. So now they're at like $96 a share. They're trading at a $26 billion valuation. And yeah, like let's leave it. Let's go look here. Let's look at how much Amazon sells together. Amazon sells in North America, they sell $55 billion a quarter. So they're selling over $200 billion a year in sales in North America, right? And so let's just say online stores, 45. Third-party sellers. Yeah, so let's just say that, 55 billion. Let's just say 50. Let's say 50 billion a quarter, right? And a firm does 500